I asked AI, has the market bottomed in April 2025? Here is what he told me. As for April 2025, it's uncertain whether the US stock market has definitely bottomed. I expected that he will not be 100% sure because nobody knows the future, so I continued to ask him, what's the most backtested indicators of stock market bottom? And AI gave me the definitive list of indicators which previously marked the bottom based on a real research, crash after crash during the Great Depression, 1974, 2000, 2008 and 2020 market crashes. AI outputs 7 most solid and backtested indicators which could mark the market bottom. And in this video we will go through all of them and mark if these indicators were triggered in April 2025. And finally we will understand, is the bottom actually in? What's going on, investors? Hopefully guys are doing well out there. Let's immediately begin from the first indicator, VIX Spike above 40 to 50. What it shows extreme fear and volatility. When VIX spike more than 45 and starts to fall, future 6 to 12 months returns are usually very strong. Now where we are now in terms of the weeks, we can see, so for the April 2025, VIX spike north of 40, and from the history we were here during the crash of 2020 COVID crash, also in 2012, 2010 and 2008. All those was huge opportunities to buy into the market. So this indicator we will mark as triggered, and let's move on. The next indicator is Zweig Breadth Trust. What it shows, explosive buying across many stocks after a crash. It was triggered only 14 times in 75 years, and every time 6 to 12 months after that, market returns were 20% to 30%. It triggers when 10 days moving average of advancing stocks rises from below 40% to above 61.5% within 10 days. Let's have a look at this indicator, and if you can see, it's actually very powerful. It showed the bottom here, it showed the bottom here, it showed the bottom here, it marked the bottom in 2010, and now we can see this indicator was triggered again one more time. So we already have 2 indicators which showed that in April 2025 we probably had a bottom. We have another 5 indicators to go. So let's continue with the next one, insider buying spike. Insiders purchases are basically CEOs, CFOs, directors are buying their own company's stock aggressively. Major insider buying spikes usually is showing that this is the bottom because the executives see that the price of the stock is too cheap to ignore, and also they see the potential that in the future the business probably will be doing better than it's doing currently. Let's see, where are we now. Using the source of data Roma, we see real-time insider transaction data. So for the 1 week, we can see that we have 346 transactions for buys and 535 transactions to sell. So insiders bought $86 million of stocks, but they sold $250 million. So for the perspective of 1 week, we did not really see the spike in insiders buying. Mostly they are selling. But what about 1 month? So from the perspective of 1 month, we see that insiders bought $1.8 billion of stock, but they sold almost $5 million in stock. So from the perspective of insider buying spike, we can see that this indicator was not really triggered in April. So we put cross here. Let's continue with credit spreads. Credit spreads widen, then narrow. What it shows is basically showing the bond market panic. High yield spreads, junk bonds explode wider during fear, then narrow sharply when market bottoms. This particularly was strong in 2009 and 2020. Let's have a look, where are we now? So if you can see, in .com bubble crash, this junk bond spiked to 10%. In 2008 great financial crisis, it spiked north to 20%. In COVID, it spiked to around 8%. Now, do we really see the spike? I would say no. So probably this indicator was not triggered in April as well. So currently we have 2 indicators which are showing the market already bottomed in April 2025, and 2 indicators which showing that it did not bottom just yet. If you're enjoying videos so far, please consider subscribing to the channel. On my channel, I do stock fundamental analysis, I run public portfolio, I do educational videos. If any of that interests you, welcome to join. And let's continue with the next indicator, sentiment collapse. In terms of the sentiment collapse, we will consider the American Association of Individual Investor Sentiment Research and also Fear and Greed Index. What it shows, everyone is bearish, nobody is bullish. When AAII bullish sentiment drops under 20, the average 1-year forward returns are 15% to 25%. Let's see where are we now. Currently, the week ending April 23rd, we see that 21.9% of investors are bullish in the market. And meanwhile, the historical average is a 37.5. So we are definitely quite bearish on the market. Meanwhile, if you can see, from this perspective, 55.6% are bearish and 22% are neutral. So I would say that investors are quite bearish, but we did not really reach under 20%. From the perspective of fear and greed index, currently we are at 35, which is showing fear. And previously, actually in the most fearful environment, this indicator reached all the way until 3. 3 is extreme fear. I mean, these indicators almost went negative, which is definitely not a joke. So I would say fear and greed index was definitely triggered, even though currently we are bouncing off those significantly fearful levels. Because of AAII sentiment, threshold is 20 and now we are at 21, so I think this is almost there, almost reached. And for fear and greed index, we went all the way until 3. I would still consider this as a triggered, even though just technically we did not really trigger AAII sentiment. The next indicator is MACD weekly bullish cross at low levels. This is the technical indicators. What it shows, momentum reversal. When the weekly MACD crosses bullish after a big decline, the probability of sustained rally are very high. Let's see where are we at currently. If you pay attention at MACD, you can see that blue line did not really cross the orange line yet. So usually what we are looking for is something like this, when the blue line is crossing the yellow line, something like this. This is the indicator which, if triggered, is showing the probability of the bottom is higher. Currently we have 3 indicators which are showing the market bottom is already in, and 3 indicators which are showing the market bottom is not just in yet. So let's see the last indicator which will be deciding if the market has already bottomed. I'm excited. Let's see. The last indicator is PE ratio collapse, fundamental valuation indicator. In this case, stocks become fundamentally very cheap to ignore for the market participants. Let's see where are we now. Now looking at the valuation for the forward PE ratio of mega cap 8 for the S&P 500 large caps, S&P 400 mid caps and S&P 600 small caps, we can see that the valuation definitely corrected from almost 38 to currently at 22, and currently we have some rebound to 24. But are we at really like aggressively dirt cheap levels like in 2008 or 2000s? Probably not. From another perspective, the difference between here and here is maybe 15% or 12%, which is relatively minor. So for this indicator, I'm not 100% sure which should I assign triggered or not triggered. For me, I personally think that this indicator did not really trigger, because we can see that extreme dirt cheap levels in 2008 and 2020 were not really reached. But let me know in the comments if PE ratio is already looking for you dirt cheap, or from the fundamental valuation perspective, we still have room to go down. Currently, we have 3 positive indicators and 4 negative indicators, which is showing that market has not bottomed. If you enjoyed the video, please consider subscribing to the channel and let me know in the comments if you believe that some indicators I should be marking as a negative or should be marking as a positive. Thank you so much, friend, for stopping by. I will see you in the next one.